So welcome to another update this week from New York. Arrived into town on Tuesday, same day that the former president, Mr. Trump, was indicted. So definitely a bit of a circus here, just a couple of blocks away from the hotel near Fifth Avenue. Still a police presence down there today, just a few days later. But anyway, let's take a look at the week that was. So here in New York this week, and what a week it's been. Absolutely jam-packed, just here at Central Park at the weekend, and a beautiful sunny day. Spent part of the week looking for an apartment here in New York, and I can tell you the rental scene in this city is off the charts. Just very little availability. Prices are sky high. I don't know what that says about the economy or the rental market, but certainly lots of opportunity for people in that game in New York, contrary to what we might be hearing post-pandemic. Had an incredible meeting also this week with Peter Sobolov, who's a partner at Insight Partners, one of the world's largest private capital firms, and just really interesting to get a long-termist view on what's happening in the markets right now. Clearly, it's been a period of uncertainty for the last 6 to 9 months. Things are starting to bubble up. I can see it myself just in our own business, the interest that we're getting from firms that are starting to take action, moving, actually capital raising forward, which is surprising. But nonetheless, there's opportunities there. And I guess like any market, when it's down, the opportunities are there for those that have capital to get in and pick up some bargains. I think late 22, 23 will be a great vintage for private capital. But it's great to get a temperature check on that in, what's arguably the center of capitalism, much less private capital in the world. I always get a great sense of energy when I'm here in New York. But it, as I said, it's a great temperature check also on what's happening. I think a lot of really upbeat activity, somewhat surprisingly, because there has been a period, certainly for the last couple of quarters, where there's been some concern, and rightly so. So going to spend part of next week in Boston and Chicago. It'll be interesting to get a sense of the pulse in those cities. But I can tell you for New York, it is absolutely firing on all cylinders right now. So great to see. So as I mentioned, one of the reasons I'm over here is to get an apartment, relocating here. This is absolutely the center for what we do in the private capital space here in New York, and really looking forward to being closer to our clients. So the 500 or so funds we have on the platform, over 85% of them are based here in the US. So great to get closer to clients, looking forward to spending more time, not just with their clients, but prospective clients, and already meeting with a lot of great firms here in New York. We've got FinTech week coming up here in a couple of weeks as well. So just great to be at the center of it. So just thinking there this morning, it's 35 years since I first came to New York. Incredible, back in 1988, and actually worked at a restaurant at a Yonkers as a busboy and serving ice to the bartenders. Hard to believe, 35 years. Now I come back here, we have some great clients here. The city is as vibrant as ever. I was thinking actually in 88 I picked up a book by Donald Trump at the time called The Art of the Deal. It was published a year or so before then. I thought it was great. It was advocating for real estate and kind of no money down, and lots of actually at that time the TV was full of infomercials really promoting that, and well, that didn't really age well. So but it is interesting nonetheless. I really love the city here, and great to be back. So as I mentioned, if you're over here for FinTech Week in New York, It'd be great to grab a coffee with you if you're in private equity, in the venture capital space. We'd love to get your thoughts on what's happening in fintech. And yeah, let's catch up. So reach out to me on LinkedIn, send me a message if you're here. It'd be great to meet. So one part of the market that's clearly not faring as well is commercial real estate. It's clear, as I'm in around the city here, seeing some of the larger buildings, those that have open atriums, coffee shops in there, really quite empty. So I think there's kind of a tale of two halves. You've got the rental market, which seems to be booming. I guess lots more people wanting more space, working from home, but not so much with the commercial offices. So it'll be interesting to see what happens with all of that spare space, and what opportunities exist for either repurposing of the space. I think there's a real financial challenge that needs to be addressed in terms of repurposing that commercial space for residential purposes. And I'm not sure that the economics are there to do that right now. But when you think about the sheer square footage that's coming onto the market and will come onto the market with expiring leases, etc., in the coming months and years, then you've got to wonder what that's going to be used for. It's certainly not right now looking like it's going to be populated by swathes of corporate workers. So that's going to be an interesting model. Be interested in anybody's thoughts in terms of what's happening in that space. It's a huge potential opportunity, but also potentially a big challenge for anybody in the CRE space. So watch that one with interest. So here's a summary of the themes that have emerged from the meetings and conversations that I've had this week with various members of the venture capital community in particular. First is deal volume clearly is down. It remains reasonably slow. There's certainly more of a focus on those quality deals. So I think a lot more due diligence that's being done. I think another theme is, a couple of people have mentioned to me they expect things to pick up a little bit towards, Q3, Q4 of this year. And, as news trickles out on the types of deals, the valuations that people are doing deals at, these are the kinds of things that drive activity, particularly in the venture capital community. And so it'll be interesting to see, how those numbers, bear out as the year goes on. I think the general consensus is that there's certainly good value to be had, and I think as more news of that spreads, some more of that dry powder will be released, notwithstanding the the need to continue to invest in existing portfolio companies. So yeah, I guess we'll watch with interest. Certainly hopeful that things will continue to improve for everybody in the ecosystem, for not just those providing capital, but those raising capital. So we'll watch this space. So a couple of milestones passed this week. First of all, welcome to the 3,000 plus followers that we have on LinkedIn. It's an important platform for us. It's our primary social platform. So really appreciate you guys following the company, keeping up to date on what we're doing. But also two very important milestones for the business. Past the 500 plus fund mark with over 50 billion in assets on platforms. So two very important milestones for us as we continue to build out the business. Thanks for all of your support, for everybody who supports the business, is a client of the business, works for the business, or deep partners with us. We really appreciate it. Thanks a lot. Well, that's it for another week. Hope you guys have a great week, and I will catch you soon. Take care.